The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 210, Nasdaq up 65, S&P's up 25, gold contract up $18, trading $18.91 an ounce. You got silver up 51 cents, $24.82 an ounce. Light sweet crude down 63 cents, $40.49 a barrel. Notes and bonds. We have both of them flat out here this morning. The 10 is at 138.05. The 30 is at 172.09. And King Dollar. King Dollar down 139 ticks, trading 92.824. The euro is at 118. The yen is trading out here at 104.80. And the British pound is at 131 to 1 U.S. dollar. Tom O'Brien. Happy Friday 13th.
Happy Friday the 13th. That's right. Oh, yeah. Man. Watch out in those markets.
I'm telling you, man. You know, and folks, you know, what's intriguing here is that the NDX 100, this is like a replay every day. And what I mean specifically is that they run them up overnight, and bottom line is that all day long they have a hard time basically holding price. So it's going to be interesting. There, that's what we've had basically just every day this week. You know, so we'll see where this shakes out today. You still have Apple still weak. You know, Microsoft bottom line is doesn't have any juice in it. So it's going to be pretty wild watching how we shake out on a Friday coming into the weekend out here.
Yeah, I mean, quite a head start to the upside. I was saying it's interesting early this morning, and things have diverged quite a bit since then. But when I was doing my program at 8:30, they were all, and I say they were all, the four indices, S&P, Dow, NASDAQ, and even the Russell, were all up between about 0.7 and 0.8%.
Yes.
And that hadn't happened, you know, because of this winners and losers. Is the vaccine going to open things back up right now? Is the virus going to shut things down, et cetera, winners or losers? But today it was kind of just everything was up, and now that's sorted out a bit with the NASDAQ giving it up, like you said, for sure. And you have the Russell, on the flip side, accelerating higher, up 1.9% to the upside.
Yeah, those it'd be interesting to see where those small banks are going to check out here. And you had quite a trade here in DraftKings, huh?
Well, we will see. It's still going on. The day is young, man. DraftKings had had some strong earnings, but it's pulled back on the open. Pretty quickly in pretty dramatic fashion. So you're sitting at $44 from about 41 and change, I think. What did it close at yesterday? Yeah, 41 and change something, but it was up to 46.40. But regardless, I mean, the long term, man, and we had a short term trade that expires today in options. But long term, you got to be happy with these numbers, man. You're talking about they raised the fiscal year guidance of 2020 to 540 to 560 million. Yeah. They were at 500 to 540. That was a beat of the expectation. They have 1 million unique. So the way they phrased it is monthly unique payers. That's can you imagine a bookie who's got 1 million people that say hello to him on the corner on a monthly basis?
Seriously.
I would want some of that bookie's. I would want to buy shares in that bookie's company, especially.
And the paper bags, folks, would have to be bigger. And depending on how long you've been around, folks, the paper bags, you'd run around the city in paper bags with all the numbers inside them. Go ahead, Tom.
All those good South Boston, Southie bookies.
Yeah, totally.
And then, so great numbers they're looking for, 540 to 560 for the fiscal year, but next year they're looking for 750 to 850. How about that for growth, man? From revenue this year, 540, and that's including this coming quarter. Yeah. That's going to be in the 540 segment. There's just good things. 133 million in the quarter, and they lost 57 cents versus losing 61. So, you're 6.3% higher right now. You were up to 46.40. I imagine you'll finish higher today, but anything can happen in these markets, man. This company, though, the reason, we had a bullish trade, so it's going well so far. Quite the pullback. This is where, we talked about it with some of the other equities, right? I mean, we talked about it with Zoom, man. Did you see Zoom? That would have been a decent opportunity so far where we were looking at some of those 320 puts, right?
Yeah.
And we were looking at those when Zoom was trading at about 370, and I believe that was on Tuesday. And you're at 420 already, and you were able to absorb. We were going out like a month or two, right?
It was
maybe a month.
It was the November, December's, yeah.
December options, third week of December. But we were getting $20 for selling a 320 put, and we're now at 420.
And what's really cool is that what had happened, folks, is this. Tommy texted me later on in the day, and this is really cool to really understand too, is that when you had texted me, Tom, like, here, let's pull this up.
I have the chart up. If you can see my screen, because I have this was the volatility. You can see 10:30 in the morning. We're reaching the 366. We're live on the air, so we were discussing it. And I said, things are coming apart. And I said, there's some areas where stocks are approaching areas, man. If you have some long-term conviction that these are areas, and you said you can sell puts, right? And so we looked at the 320 put when Zoom was trading at 370. Right. And it was about $20 of value that we would absorb. So that means if you get executed, you're basically holding Zoom at 300. Right? Because you collected $20 and you buy it at 320. Now, the risk is it goes much lower. If you are looking to buy that stock for the long term, though, there's your entry. Now, when it made it, I said to you that because within the hour, it was up to 395.
Right.
And I said, oh, man, I wonder what kind of opportunity we may have just missed, right?
Yeah.
So an hour after the show, I go into the options. I say, I wonder what that 320 put is now, because we're almost at 400 now.
Exactly.
And it was still at about $16 or $17.
Which is huge.
Which is huge, right.
Yeah.
And that's because no matter, I think what the market was saying, right, is that, we just went up $25 basically in an hour. But it was also saying, hey, we just went up $25 in an hour. This stock is moving. If you want, if I'm going to sell you a put at any price when this equity is moving $25 an hour, it's still going to require a decent amount of premium too, which is kind of which makes sense, right? Because on both sides of the market, you traded $60 in 2 days in this equity. You just went the other way. So, for people who are on the other side, think about that, right? We were looking at puts, but I guarantee calls were pretty close.
Yeah.
And we were going $50 below the market, and at 370, $50 above the market's 420, and already you were like, uh-oh, wait a second. I just saw a call for December, and 2 days later, Zoom is trading above it. But for the methodology we were going for, the bias, right? If you wanted to be a buyer, that was a pretty cool trade. And you saw the pullback. You've seen kind of the markets recoil a bit in some of these stay-at-home stocks that got pummeled. And it's kind of similar with DraftKings, as in they're a huge growth company, but they're a company that already has huge revenue, and DraftKings is losing money. Zoom is making a lot of money, man. So that was quite a pullback for a company making a lot of money with huge growth.
Yeah, there's no doubt, man.
Yeah.
And it was amazing that, you only came off a couple dollars in the option market. It's like, okay, if we thought the trade was good at 10:30, at 11:30 it was phenomenal.
And I think the reason why is because it's very easy to do if you're going to be a long-term investor. You believe in the company, right? It's probably very difficult to do if you're a short-term investor because of the volatility in these stocks right now, that you may go far below 320,
sure.
right?
No, absolutely.
So it's a unique opportunity, though, in some of these equities for
really
people looking out. Yeah. Exactly, totally.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 212. NASDAQ is up 59. S&Ps are up 25. Gold's up $15. And King Dollar's down $1.62. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 167. You get the Nasdaq up 40. S&Ps are up 20. And we all go over to Disney. I mean, they come out with some big streaming numbers, right? I mean, that was pretty intense, man.
They sure did. I probably would be disappointed if I was bullish in this, and I am bullish from an equity position. This is the first trade we had in Rocket Man, some Disney. But if I had made an option trade, I'd be disappointed because the numbers can't be better almost across the board in terms of expectations, right? They got some big losses at the park in terms of last year. But, man, the headline, 73.7 million subscribers for Disney+. That's an increase from, I believe, 57 million last quarter even, which is just huge. Now, when you add in, CNBC's got a cool graphic here. You add in Hulu, 36.6 million. You add in ESPN, 10.3 million. Here's the thing to keep in mind, though. I am counted in all three categories of this, I imagine, because I am a bundle holder. And if you're a bundle holder, I bet ESPN, it looks like they don't mention it, but they're probably saying how many people they have access to each one. Nonetheless, man, strong numbers in a big way, far over anything they imagined. It's been live for a year, like exactly, I believe.
Really?
Yesterday was 1 year. From when they went live, and the numbers they had, do they have it in here? Yeah, so check out some of the analysts. So Morgan Stanley raised their estimates to 230 million by the end of 2025. So it's like, man, how are you imagining where the world is 4 years from now? Good luck to the analyst at Morgan Stanley.
Yeah, right.
But 230 million. MoffettNathanson, they're just going out to the end of 2024. Same thing, 160 million. Regardless, man, strong numbers. Here it is. They had 10 million people that signed up the first day. In the first quarter, they had 26.5 million. So right out of the gate, very fortunate timing in life, and everything can be everything sometimes, man. They launched the middle of November. The whole world shuts down 3 months later, and everybody stays home, right? It's remarkable how fortunate they were to be able to capitalize.
Yes.
If this had happened 1 year earlier, they were not positioned in February. You know, they probably would have accelerated things, to say the least, but even 1 year. Now, here's what was interesting is, so Disney's higher, but they could be higher. I mean, they were just trading at 147 on the Monday high. They still have a lot of woes, though, in the parks. Now, it's interesting that as I pulled this up, you have Warner Brothers. So they're out there, and this is a perfect example. And they have nothing like, now they have their HBO Max, but they haven't seen anything like the growth that Disney has. And here are their problems they're dealing with, where Disney's been able to navigate this a little bit better. They have Wonder Woman 1984. I'm not familiar. I'm almost learning about it for the first time. They easily see it as $1 billion grossing box office blockbuster, and they're trying to figure out how they bring it to sale. And that's whether they push it to Christmas, that they try and release it Christmas, man. Are you seeing cases, folks? 160,000 a day, and then push it out to the HBO streaming service, which would probably, they know that they're going to sacrifice something on Christmas, but then you're probably going to gain something on HBO Max, right?
Yeah.
Versus just trying to go for the big blockbuster in theaters summer 2021. Hopefully things are better. You're seeing a shift here where Disney's better able to capitalize on that because they're pushing everything almost to streaming numbers. We mentioned it with Kevin yesterday at the end of our interview, right? It's like you start getting people signed up and you have 100 million people, 200 million people. Well, there's your $1 billion on a monthly basis, man. How about that? 200 million people paying $5, $1 billion every month.
Right. And I think all they really have to do is bring down the cost, like, you know, that $30 cost for
Mulan.
I think that just has to come down. You know, and I know when we were talking, it's like, okay, that's very inexpensive because you're not buying popcorn and all that per house. But guess what? If you bring it down to $6 or $7, then you're going to have 100 million people say, oh, I'll pay $6 to $7, you know?
And here's the kicker, right? They're people paying you for the privilege to be able to pay you.
Yeah.
Think about that, right? You couldn't have bought Mulan unless you were already there.
Right.
So people are paying you to be subscribers for the privilege to be able to pay you when these come out.
Yeah.
I like that business model, man.
No,
but
totally.
I agree, the $29, man, and even with kids around, wrapping your head around, because here's the problem with that business model is that there's no changed user experience. So there's no real incentive above waiting 2 months. Because the incentive to go to the movie theater is you can't wait 2 months, watch it at home for the same price, and get the same experience.
Right.
When they charge $30 for Milan, I'm just like, I'll just wait 3 months, and then it'll be part of Disney Plus anyway. So that's a hard one.
That's interesting. I see what you're saying.
Yeah, you know, versus the theater, you can't wait 3 months and see it in the theater for
because
cheaper.
There's so much content, man. I mean, you know, I'm stuck on wicked tuna. If you like the water, folks, you like fishing.
You and your National Geographic, but that's Disney. That's Disney. That's
it
Disney
is, and
Plus.
now they got. You know, if you haven't seen it yet, they got wicked tuna, folks, Outer Banks, and it's awesome. It's two different ways of catching
National
tuna.
Geographic. Yeah. Those nature shows, something to get your head out of the gutter of nonsense TV and get your head out of the gutter of news and financial news, man. A reprieve from all of that.
No doubt. Let's go take a look at these S&Ps. So the S&Ps right now, you're at 21 up. Bottom line, you know, it's giving it up on price again, man. And we'll see where this baby shakes out. What you're going to see here, though, pull this back. So you can see this spike. It spikes lower. Okay, so it'll be interesting here because this thing can get down to 35, 34. That'll be 20 points lower than we are. The NQs, they are also taking some pressure. They got, if you want to see something really cool here, watch this, folks. I got to show you this for a second. So this thing popped down, you know, and, you know, we got down into this level of, let's see, what is it? 11,831. You get volume down there. So we're coming right back down. Now, let me show you the Qs because this is really cool. The Qs, they almost filled the gap, okay, but they stopped. This is pretty funny. I got an order in there to close this trade that I have, right, that I slipped out that I had from 7 o'clock this morning. And what you're going to see, so watch, the gap is 287.66, okay? No, 288.43. And this happens to me a lot, but sometimes I'm still trying to figure this out. I have a close in at 288.59, and it just hit 288.60. Isn't that a trip?
It did.
And this happens a lot, folks, okay? If you're day trading, you know, most of the time I'm saying to myself, okay, here, it wants to come down to the gap, and I'm going to put it above the gap, you know, by 10 or 20 cents. and just missed me by a penny. It's like, really? It'll be back down, but, we'll see where it shakes out. But what you have here is that, bottom line is that, until Apple gets some action, which, it can't seem to get any traction. And Microsoft is the same way. And, those two weighting structures in general, I mean, they're only down 37 cents and 47 cents, but that 37 and 47 cents weight-wise makes a huge difference inside the NDX 100, man, which is crazy. But,
market cap-wise, it's mammoth, right?
Yeah. And then the strength inside the NDX, you had that PDD gap higher again. That's up 7.4%.
Pinduoduo.
Pinduoduo. I got to get that wrapped around my head.
Pinduoduo.
That's
pinball.
It's easy. Pinduoduo.
That's a catchy name. It is. That's a good name.
Stay right there, folks. Tommy and I are coming right back. Dow's up 159. Nasdaq's up 59. S&P's up 23. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow. Dow's up 198. You get the Nasdaq up 67. S&Ps are up 26. And, folks, as you come over to our website at TFNN, you are going to see right under featured content our man, Mr. Basil Chapman. He is going to be doing an all-day webinar, live webinar from 9 o'clock in the morning to 4 o'clock in the afternoon. Basil does some outstanding work, folks. Check it out right on the front page of TFNN. You're going to see it right under featured content. Basil's going to it's set up in like 3 segments, 9 to 9:30, and then of course the market kicks off and we go from 9:30 to noon. Noon to 1, you're going to take a break, and then coming out 1 to 4, and then Basil will go over everything for you from 4 to 4:30. Great workshop. It's only $295. What you get with that is, of course, you get the whole day. You get his newsletter for the month. And as soon as you sign up, folks, Basil has, how many workshops do you have on there, Tommy? He's got.
I just pulled them up, so maybe they can jump to just a quick slide because it is great. Basil's doing the webinar on next Thursday, and then everyone who attends gains access to the opening call. That's $149 value right there. And I got, I think it's 7 or 8, man. The last one he did just in July, and it's, will the chart formations that worked in the first half of 2020 continue to work in the second half? He did that. He did one in May talking about the Chapman Wave technical tools that produced strong gains in 2020, the dark cloud news cover back in February, November, a year ago, comprehensive review of the techniques and market outlook. So you can check out all that comes with everything. And then what's also going to make Thursday pretty cool is that everybody that went to Basil's first webinar back in April, when these restrictions first started, they're going to get to go to that for free. So there'll be a good crowd there. Questions, answers, kind of the whole vibe. Should be a cool time on Thursday. So check that out on the front page of TFNN. And right when you sign up, you gain access to that, so you can be watching those webinars over the weekend, checking out the opening call, getting ready for Thursday. There you go.
That's pretty cool, man. Yeah. No doubt. 877-927-6648. Let's go inside the Dow and see what type of strength we have inside the Dow versus Cisco. This is interesting. Cisco's up 6.5%. You got Goldman up 2%, Boeing up 2%. No big losers really. Apple down 0.7%. Verizon off 0.3%. So that's no big deal there. Cisco, this is pretty wild. This is an equity that hasn't moved in years, meaning up. It's moved down.
And they had their earnings as well. I had it up earlier. I think I closed it, but they had some pretty strong numbers as well.
Right. So the thing that's amazing about Cisco, folks, in order to move Cisco $2.54, you have some big buy-in. Cisco has outstanding 4.2 billion shares, a B. It's like, really? Yeah. That run-up, Tom, I remember when in 2000, the run-up into 2000, folks, I used to go over this quite a bit because I was trying to figure out, okay, you got that many shares outstanding. Like, what does it take to move that stock $1? You know what I mean? It's like, wow. I mean,
big time, man.
You talk about supply and demand. It's like, holy cow. Monster.
Seriously. And how about gold? Gold, what was going? There was some action in the metals market starting at about 7 in the morning. Silver got a little pop starting right at 8 in the morning. It got quite a pop. But there was some movement early with those metals catching a bid.
And that was big movement. And this was before the pit opened, folks, okay? Someone came in at 7:10 this morning, and they bought some contracts, man. I mean, you're talking about 5,100 contracts. And in the gold market, folks, that is a big buy, particularly when the pit is not open, because that means that you're buying them electronically. And, you come in a market with 5,000 contracts. Each contract is worth $188,000. So you're talking some big numbers. There's no doubt. Yeah. One of the targets want to take a look at TGB with Taseko. So what Taseko did out here yesterday is they came in with a secondary. Selling it at 83 cents. And, if you own it, you can stay there. If you don't own it, I mean, I would love to see this basically test the 79 again. It has some heavy support at this breakout area, which is the 82. The problem that could be done here is that if it basically gets under this, then you get the bottom of that breakout, which is laying out there at 59. And these, these shelf offerings that are hanging out here, if you're in an equity, folks, for a long period, for a long run, you want to know what is a shelf offering, because I'll show you another one right now. The SAVA is the ticker symbol. That's down $2.81, and you're going to see that's the same thing. They had the shelf offering out there. Bottom line, they come out this morning and say, okay, I'm going to pull the cord on it. You know what I mean? So it makes a difference, and they're pulling the cord. Watch this one, folks. This is. I do not go buy this stock right now, okay? Because you're trading at $8.35. Well, the shelf offering is going to be at $8. So guess what? That's where it's going. That's when you get that's just how it goes. You know what I mean? It's like, okay, why are you going to pay $8.35 when you get a shelf offering that's at $8? And there's a lot of them out there. There's a huge amount of them out there. And what does make sense is that if you're a public company, is to have it out there. Because you have everything to win and zero to lose. You know what I mean? You don't have to go out and say, okay, I'm putting another offering out there. It's sitting on the shelf. You can wake up in the morning and say, you can get paranoid about anything. Say, I need more cash right now. Bang, hit the button. Here it comes. You know what I mean?
Yeah, right. No, it's in this environment especially, right? Everything that's having credit, having the ability to have that credit anytime you want. It's not credit, right? It's basically just having access to company equity.
Yeah, ASAP. Which is totally where it's at. Let's go. What's the Amazon? So it's amazing. I mean, the markets in general. 1 second. I mean, think about this for a second. We haven't talked about Brexit in like a year now, right?
We got a lot going on this year.
I know, but I just say so. Now it's not even about the election. It's not even about the stimulus. Okay, now the question is that, hey, can these companies make money or not make money? I mean, that's where this comes down to, and it's going to be intriguing, seeing how this shakes out. Okay, are they making money? Are they not making money? Who's going bankrupt? I mean, because folks, what you have out here right now is that there's going to be a lot of companies that are not going to be in business in another 4 or 5 months. There's, the bigger companies, it's already started. The smaller companies really haven't started yet. What will happen, though, with the smaller companies is that would hurt the bigger players in the marketplace, because the smaller companies, bottom line, we're talking about restaurants, we're talking about any type of companies that are basically set up in, Main Street USA and malls. It's out there, man. I mean, it's definitely out there. You can stay in business for a certain amount of time, but when you start talking about a year of cash flow, it's like, okay, and
it is crazy we're coming up on it, man, because the end of February was when I went out and bought some N95 masks. The market low was March 20th, but to remind people when it was really becoming real, it was the end of February that things started to become real, and we're coming into end of November, December. So
there you go. Stay right there, folks. Tom and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 178. You get the Nasdaq up 38. S&Ps are up 22. And we were talking about the Qs. So the bottom line is that I got my buy to cover. Now watch what happens here. I just want to give you, if you're day trading, folks, and I'm not professing that people should be day trading, by the way, okay? But the bottom line, if you are, I just want to show you how this shakes out. So the top of the gap, okay, was 288.43. I had a buy-in at 59 because that's just how I do it. And the first time it went down to 60. So we filled the gap. It's 41. Now, on the other side of that, what will end up happening, because my take is that we're going lower, and what happens during the daytime when you get something like this, as to fire it off again, what I do is this. See this downdraft that was created at 10 o'clock? The low of that is 289.17. Well, then I fire it off again. I put a sell in. It'll be about 289.10 probably. And what I'm looking for is another pop there. And then, bottom line, you just do the exercise over and over again as to where the volumes basically shake out. Because what I do is I'll go from the Qs, which I'm trading, to the actual future. Let me put this, I got to get this thing closer. Because what you're looking for here, I'm looking for a contraction of volume as it came down there. Yeah, and I'm going to get it because the last big bar was at 1010. That was at 14,000. We finished this one up at 6,000. And then you see that bar up there on the end is at 870. Is it 870? Low 870, yeah. And we're at 840. So that says to me that would be like you get up to there, you load it up again, but, we'll see where it shakes out. But it's a wild one, man, no doubt.
So much going on in this market, man. It's pretty remarkable. And I was talking about on my show today just where we are in the S&P, man. I mean,
up 10%, right, for the year?
Yeah, we're basically up 10%. Yeah. I mean, you back it up to the end of 2019, you're at about, and not even about, on the futures I have going back, you're talking about 32.36 exactly. We close at, and we are, like 330 some odd points, man. So you're talking about 10% above that level, and you're even 150, 160 points above pre-COVID highs, but 10% this year. What were we up? 30% or something last year, 40%, something silly.
Yeah.
Small decline the year before that. With everything considered, man, a broad index like the S&P 500, risk-reward wise, right? I'm saying to myself, as you said, it's going to take some time, man, for these businesses. COVID is spiking. I think, depending on who you're talking about for counts, 140,000, 150, 160,000 cases in one day we're dealing with now. there's going to be some pain for businesses over the next few months. So does the S&P finish up more than 10% for the year, or up between 0 and 10% for the year, right? If I had to choose that binary bet, I'd say between 0 and 10.
Yes, and I think
or lower, but I'm, versus if you're choosing a side, all things considered, 6 weeks left in the year, you're up 10%, and the trading range that you're in, man, we've bounced lower off these levels twice now.
Yeah, and it looks to me, we certainly don't have it in the numbers. Like we had the inflation numbers out yesterday, and they were nothing, right? But it looks to me that inflation's in here. You know what I mean? Because these higher numbers, it's like, okay, the things you still need, whether it's food, whether it's housing, are higher for sure. You know what I mean? So it's like,
yes.
And is that what the market is just saying that, okay, at some point, folks, this is going to kick in, meaning inflation. We'll see.
Yeah.
The note and bond market is so tricky, it's unbelievable. I mean, the thing broke down once, came back, broke down tremendously again. Now it's trying to get back to a classic Bud Rolf's back up to the breakdown area, and we'll see if it can get this thing going. Yesterday you had some strength in it. Now this got a long way to go. It doesn't look okay. My take is that I think the range has expanded. Like the 10-year would have to get to 138.18 to get back inside it, but guess what? We made it to 138.10 this morning. It's like, okay, man.
Yes.
It's something else, man. It really is.
Yeah, and that 30-year, I mean, right barely under that level. What's interesting is if you put the TLT, you came right down to the area you had the low of June, which is 150.
The TLT, here, this is a classic. Now, we've just gone through the cues, folks. If you want to see how markets like to basically react, man, the TLT was it's hard to comprehend. We got down to 154.62. Well, the high of that low was 156. Let me get this right. 150. Yeah, 154.62. It closed at 156.06. So it got down into the high of the low and rejected it. So it was like, okay, man, That's also saying, hey, it has maybe the note and bond market. They're just like a cat, man. They got 9 lives, and it depends.
Listen, that's an area. I was just gonna say it's an area to watch, no matter what, man. When it bounces like that off that critical level back in June, for sure. Yeah. I mean, yeah, back in June. Yeah.
Yeah, no doubt, man. No doubt. Sorry, man.
What are you counting?
I'm waiting for this bounce to get into that level that we were just talking about.
Perfect.
Oh my God! Let's go to the GDX and take a look at the GDX. So what you have out here today in the gold market, folks? Okay, it's pretty intriguing because what you don't have the dollar falling apart, and yet gold's holding price. And if this was any other day except for a Friday, folks, okay, that wouldn't be a big deal. It's a big deal on a Friday because if gold can hold price on a Friday without movement in the dollar, it's like, okay, that means we still have buyers out here. We need more volume. We need more volume in that market right now. But that's a positive, Ben. That's no doubt a positive. We get the dollars down 161. I think what the market is looking at is that what you have here is that you have, like, we go over to the euro for a second. You're going to see the euro has some traction out here this morning. And, of course, that is the largest weighting structure. Look at that's only a small amount of traction, but it's peeking its head up over the highs of the last couple of days. So maybe that's what the market's looking at, man.
Yeah. It's interesting that the final hour of last night, as in sell-off all day from 35.65 to 35.15. The VIX was over 27, and then it kind of saved itself and accelerated for the final 15 minutes, and then even for a half hour, kind of at the end of the trading session, right into almost 35.50. We'll see where the final hour of this week goes, man.
If I've learned anything, on the last 6 or 7 months, is that you got to pay attention to the VIX, man. I mean, I always have in a way, but the fact of the matter is that stayed elevated, and guess what? That's where we got the volatility, man. It's there.
And sometimes the simplest thing, man. I mean, so it's just buy volatility into the election.
Yep.
and then sell it off. You know, all the worries coming into it.
Yeah,
the market's going to be all right, and that's even with what's going on with the election, which is kind of ridiculous in its own right, I think. But hey,
no doubt. Dow's up 205, Nasdaq's up 48, S&Ps are up 25. We'll come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 179, Nasdaq's up 33, S&Ps are up 23. We had a question from one of the tigers in the den about the large oil companies. I can tell you that, they had a sign of strength, but my take is that they're not done going down. ExxonMobil, trading $36. When you get this close to a high volume low, most of the time you hit it. And that high volume low out there is at $30.11, and we hit $31.11. And you get volume there. So, we'll see where it shakes out. But we have plenty of oil. That's the bottom line, man. There's oil everywhere. And there's electricity everywhere. And there's solar everywhere. And there's gas everywhere. So, as technology keeps going forward, folks, the bottom line is that, oil was a great trade for years and years and years. But guess what? As one of the tigers is saying, how many people are driving, too? There's just so many alternatives that are very large alternatives that are happening. All you have to do is look around. And if you're in China and look around, let me tell you something. You've never seen so many different electric cars. They're everywhere. And what happens in China, it's very easy to see because they have different license plates. So everywhere you look, it's like, wow, electric. And then they have gas, but they have the gas cars they have are pretty wild, man. It's like gas in your trunk, you know.
Okay.
Yeah, but guess what? There's plenty of them. So.
And hey, how about we end it with Bitcoin? Bitcoin making a new high today as well, man.
Right.
16,000 and change. What is the high exactly? The high 16,585. I say new high outside of that first few weeks it had of trading back in, when are we? End of 2017.
Yeah.
So we're talking about 3 years, man. To the depths of 3,000 and back.
Monster move topside. The NASDAQ is moving south, man. Same setup.
Watch out.
Watch out. Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.